Welcome to the Business Trendsetter podcast, where we talk about trends and how to use them to grow your business. My name is Manny Turan.
And I'm Adam Hartung.
We're Spark Partners. We're here every week to deliver to you all sorts of insights about trends and how to use them. We talk about how to grow your business and why it's so important. We talk about customers, competitors, and we look at the market. And one of the things that we've been seeing a lot lately is this idea of the growing EV market. As a matter of fact, back in April, there was a report that was put out by the International Energy Agency, which is a worldwide consortium that looks at the future of certain energy policies and issues. And they clamored on this big report that, and this is in April this year, that demand was surging for electric cars. It was going to grow to 35% higher than the previous year, and demand was at an all-time high. And so I want to use that as a counterpoint to really talk about how important it is to stay in the know, in the loop, and understand trends at a deeper level. So where are we now with this idea of EV vehicles and that market?
Well, EV sales are in my estimate, to my point of view, EV sales are extraordinarily strong, and the market is growing faster than most people have anticipated. Now, that would sound wrong if you were looking at the newspapers in July. I say newspapers, that's collectively meaning the news sources, radio, television, and online. You would have thought the opposite was true, because there were many headlines around the notion that the prices had dropped. Ford dropped the sticker price of the F-150 Lightning by $10,000 across the board, making it from a $60,000 base model to a $50,000 base model. There was more than 100 days inventory of many of these cars, not on the lots, but in the warehouses. There were 100 days of inventory. And 90 days inventory is considered overcapacity. You want to try to keep it around to 70 days of inventory on the marketplace. So this idea that the prices are dropping and inventory is building, and then we get the financial results at the end. They kind of report on March or June, and they come in and their financial results don't meet estimates. So there's an expectation for what the revenues will be, and they don't meet the expectation that the analysts had put forward for what sales would be. So it became a woe is me story. Hey, this market's been overhyped. Don't believe it. People aren't buying electric cars at the rate they thought. The IEA estimate was missed, and it's not a surging demand the way we thought it was because there's now inventory sitting around. That's kind of where we've been with the popular press and what people have been saying. Now, and I think that's worthy for us to be talking about, because I think a big part of what we're trying to help people understand is investing in trends. And when you invest in trends, you have to understand the trend, because you have to believe in the trend, and you can't let yourself get whipsawed. Because the trend can look, very, very positive. If you look back, a year ago, people were clamoring for electric vehicles, and there was a lot happening in that market space. Then you say, I'm going down that road. I'm going to invest. I'm going to go down that road, and then you get this kind of a information blip. And when that information blip happens, you say, wait a minute, is it a fad? Is this a fad instead of being a trend? Should I be concerned? Have I overinvested? Have I gotten too far? Have I gotten the cart in front of the horse? And those kinds of concerns come up. So that's why it's important to, sit back and take a breath and say, wait a minute, do we know the trend? And then if you know the trend, you'll hang on, okay? It's kind of like investing. I've known people that would buy a stock, and as the stock goes up, they're happy, happy, happy. And then when the stock starts to falter, they can't wait to sell it. They want to capture the gains. When the reality might be that the stock went up and then it fell down a bit, but then it'll go on to new highs. And then it might fall, because no stock ever goes up in a straight line. They always have this sawtooth pattern to them. And so giving up is the easy thing to do in the trend world. It's easy to give up. And what we need to do is understand, how can I look at the data in order to not give up, but instead try to continue to maintain my investments. So there's some things that I think are pretty important that we should try to understand about what actually did happen. Let's take the example of Tesla, okay, as one of the competitors. And their volume in sales, their sales in Q1 of 2021, quarter one, 2021, was 200,000 units worldwide. And that seemed like a lot. I mean, the stock price had gone way up. Everybody was very excited. Everybody was saying, this is going to be a great thing. Now people are like, oh my gosh, I'm worried there's inventory on the Tesla lot. Well, the reality was in the quarter two of 2023, they sold 450,000 units. So they more than doubled their revenue in 2 years. Now, I'm going to
That's
challenge our
remarkable.
listeners out there. How many of you have doubled your revenue in the last 2 years,
Yeah,
right?
it's
In
remarkable.
terms of volume. Yeah. So it now, so where's the trend? Well, the trend isn't in the fact that there's more inventory in the lot. That's a data point. The trend is that the sales are going up pretty dramatically. Now, here's the second one. Gross margin in 2021 was 22%. And now gross margin is 18%. So we'd say, oh my gosh, that's terrible. Nobody's making money in cars. Well, but think about that for a minute. That doesn't make any sense. When the first cell phones came out, they were the size of a brick and they cost $3,000.
Yeah.
The only people who bought them were the people who really had an unmet need. They really needed instantaneous communication, and they were willing to pay up for the device, even though it was it was very large, it was unwieldy, and spotty cell phone usage. But what happened was, as time went on, the price went down, and as the price went down, more got sold. So the reality is, when you look at this and you say, "Oh, the price of Tesla cars has gone down, the volume has doubled," that indicates to you what? The market's growing.
Growth. Yeah.
Yeah. And you have to sit there and say, okay, if you're a manufacturer of electric cars, what should you do? Well, okay, if you're Ford and you make the Mach-E and you make the F-150 Lightning and you launch these cars, and initially there's a back order. People place so many orders you can't deliver all of them. You say, oh, it's going to take me months. And in fact, in the instance of both those vehicles, they raised prices very quickly. There were two price increases in the first year on both those vehicles. Why? Well, because demand was so high. Let's take a little extra cash on this. Well, now what happens is those initial orders get fulfilled. People are still buying the product. You want to keep selling the product. What should you do? Lower the price. Let's get the
Yeah.
demand up. Let's get the volume up. Let's continue to grow the marketplace. So the fact that revenues were down, it doesn't mean, I'm sorry, revenues were not down. That's the point I want to make sure we're clear about. It wasn't that revenues declined. It was that revenues missed expectations.
Right.
And don't be, expectations are just what some analysts predicted. So I wanted to take a look at, for example, there's a couple of players out there, Rivian and Lucid. Have you ever seen a Rivian or a Lucid vehicle yet, Manny, in
Absolutely.
Arizona?
Yeah.
Yeah,
There's
you
a
got them
lot
yet?
here, actually. Quite a bit.
Yeah. Well, I can remember that a year ago I hadn't seen one. I mean, I'd seen a Lucid at a car show, but I had not. I would display. Somebody had it out there trying to sell it, but the net of it was I hadn't seen one drive down the road, and I hadn't seen a Polestar drive down the road, and I hadn't seen a Rivian drive down the road. Well, now in the last week, I've seen all of them driving down the road, and I've seen all of them in a parking lot. So there is a lot more of them out on the marketplace than what I had seen before. But let me just give you. So Rivian, they make they make an SUV and they make a
Yeah.
pickup truck.
The
Basically.
SUV is really good looking, by the way. I like it a
Yeah.
lot.
So sales in June, where for 3 quarters, they've missed the revenue estimate. Okay. Missed the estimate for 3 quarters. They beat the estimate on earnings for 3 quarters, but earnings are so manipulated. I don't really care about that. So, but they've made the earnings, which to make the analysts happy, but they missed on the revenue side. But what do you think the revenue is to this quarter versus what it was a year ago? What's did they sell 50% of a year ago, or did they sell the
I
same?
would say, based on my hunch, probably 100%.
Yeah, 600%. Yeah, 6 times the amount of revenue, number of units sold, 6 times the revenue that they had a year ago. So here you have the people going, oh my gosh, they missed versus estimate. Well, yeah, okay.
Yeah.
It sounds to me like those estimates must have been really high because revenues were up 6x versus what they were a year ago. So that's what we got to look at. The right numbers is what I'm getting at. Pay attention to what the trend is. The trend here is that, yes, they're definitely selling more vehicles.
Yeah, there's a lot of loud mouths, loud voices out there when it comes to things like this. I was watching a show the other day, and they talked about one of your favorite people. I'll wait till you finish drinking, so I'll tell you who it is. Steve Ballmer.
No wonder you want me to finish my drink.
Back in 2007, he was interviewed, and he said that the iPhone was complete garbage.
Yeah.
That no one would ever spend $600 on a phone. That business people would not use it because it didn't have a keyboard. And he sat there and he laughed, right? And I think people sort of tend to latch on to these domain experts and such, and they say, okay, well, this is what's happening because one person says it. But I think what we're talking about here as Spark Partners is really looking at the trend, what's really happening on the back end, and really get out of that box and think, because otherwise you're going to be following some bozo.
Now, here's another statistic. We follow so many industries that I don't look at EV sales, or I don't even look at the market every week. Okay, about once a month. But I knew Rivian. I knew of Rivian. I knew what they were doing. I occasionally caught on to some of the information about them. They had some troubles with some financing in the past. But I was guessing to myself what the revenues would be. And I'm not even going to do this to you, Manny. I would have guessed that Rivian was a small player and that the revenues particularly weren't large. Revenues last quarter were $600 million for Rivian. This isn't Tesla. This isn't Ford. This isn't somebody that you're used to. This isn't somebody that we see on all the charts all the time. It's Rivian selling a truck and an SUV that's $600 million revenue last quarter. That's important. It's important. Right now, I've looked it up, and there's analysts predicting next quarter they could sell $1 billion. So that would be a $4 billion revenue company. That's major.
It is major.
It's not, here's somebody we think of as a small market share player, and they're doing $600 million revenue. Now, Lucid, which is, so their position, Rivian is positioned in much more of the mass market with the SUV and the truck. Lucid's trying to be much more of that Model S, Tesla Model S, the luxury kind of car company. Their revenues are $150 million for the quarter. So at $150 million in 2024, they're likely for a year, they could well make $1 billion of revenue as well. So we're talking about Rivian getting to $1 billion a quarter. We're talking about Lucid could be $1 billion revenue company. And their revenues this quarter were up 150%. Once again, they missed on revenues versus analysts. They missed on earnings versus analyst estimates. But they're missing versus estimates, not that they're not growing. So now, if you go back and talk about kind of where we were talking 2-3 years ago, and I was saying, look, if you got a chance, get into this game, get into this electric car game, figure out how you could sell parts, or how could you participate in this marketplace? Could you start to figure out how you would be the service technician for electric cars, out there in the marketplace? We started talking about that actually 4 years ago. We've been pretty consistent about it for the last 2 years. And the reality is, if you had gone down that road and you're smart, then you're in a very fast growing market. I mean, again, here's Rivian at $1 billion revenue quarter. And we've got, again, Lucid likely to make that sort of a number for the year next year. $1 billion revenue. How many listeners out there have a plan to get to $1 billion revenue?
Very small percentage.
Yeah, very few. We know that because when we talk to people, we'll ask them, do you have a plan to get to $1 billion? And they sort of look at us like, gee, I just like to grow 10%, right? And we get, the expectations are not that high. So we've always said, get in the right market, put your investment in the right place, and it will grow. And as it grows, then you have the ability to grow very, very quickly. So a lot of being successful in business is just being in the right place. And the nice thing is you can pick to be in the right place by studying the markets, studying the trends, and figure out where you want to go and how you want to get connected. So let me give you another identifying piece of why this is likely to grow fast.
Okay.
Tesla's now announced they're going to come out with something they're calling the Model 2. So remember they had the Model 3. The Model 3 was the car they came out with about 8 years ago. They announced it. I think it was 8-9 years ago. And so the Model S was up to a very expensive car, $70,000. The standard Detroit auto industry said, oh, it's too expensive. Nobody's going to buy that car. And they said, we're going to come out with a Model 3. It's going to be much more inexpensive. And immediately they got orders for something like 20,000 units, which grew to 100,000 units. They were financing the company on the down payments people were making for the Model 3. Of course, The Model 3 came out and it's been very successful. Well, now they've announced that they think by 2024, they will have launched the Model 2. And the Model 2, they're going to sell for $25,000. Again, this kind of, what does it tell you? It tells you we're expanding the marketplace. We're trying to find new places that we can grow. We already have Chevrolet with the EV Bolt out there, and they're trying to kind of be in that marketplace. But now Tesla's saying they're going to go after that marketplace. Now, this is really crucial because there's in the used car market, that's something that we track all the time, right? And in the used car market, there is almost nothing in the way of cars under $20,000. That's a very difficult thing. Now, you can go get an under $20,000 car, but it's very likely to have over 100,000 miles. It's very likely to be in less than ideal condition, right? But what we're looking at is something that would be a good quality, low mileage vehicle that you would be very comfortable to buy for yourself or your family, right? And so what we look at are the price brackets. Well, a lot of those cars would sell for $40,000, $50,000. And so you look for that to depreciate so that the next buyer can come in and get it. And so there's this big market out there for used cars, but that now is wildly unfilled. People can't find good quality used cars for under $20,000. If Tesla launches a Model 2 at $25,000, we can see that we could displace the market. In other words, we could say, instead of going getting a used car, a used internal combustion engine car, and paying $25,000, you can get a brand new electric car for $25,000.
Yeah, I
And of
think
course,
it'll be a game changer. Really,
yeah,
I think Tesla's smart about doing that, and
yeah,
especially right now with the what's happening with the used car market. Obviously oil. We've already hit peak oil,
yep.
and I don't know how gas is at your pump, but it's starting to come back up on our side of the mountains here. I filled up my truck yesterday, and it was $113 for a full tank. So believe me, it's starting to climb.
Yeah. So what we're seeing is, something that I predicted. I had it in a chart that I've been using in a presentation now for almost 2 years, in which I talked about how there's this ratcheting effect that occurs whenever something new comes along, which the EV is. You start putting more investment into that, which then promulgates, more investment gets more improvement, gets more investment, gets more improvement, and you get a ratcheting effect of improvement. At the same time, what happens is, because now you're investing in the new technology, nobody's investing in the old technology. So whereas money used to flow in improving internal combustion engine vehicles with the transmissions and the brake systems and everything that goes into that mechanical operation, that was formal investment. Well, now there's no investment going there. And so with no investment going there, there's no improvement going there. So you don't get any cost reductions. You don't get any major peak performance improvements. And so what happens is you get a ratcheting up of the new thing and a ratcheting down of the old thing. Think about this, for example, when we got cell phones. Prior to cell phones, we had improvements in landline phones, right? We used to all have that phone plugged into the wall and then it had a cord on it. We could see it in old
Yeah.
television shows. But then we went to wireless in-home landline phones. Remember that? When your arm
Yeah.
had an antenna you pulled out and you would talk on it. And so we saw improvements in those landline phones that made them more convenient in the house. But then as the cell phone got better, people started saying, why would I want to go mess around with that, right? And they started using their landline phone less and less and less, and nobody made a better landline phone. And now you're getting better and better mobile phones. Well, that's what's happening now in the vehicles. We're getting better and better electric cars. So in this last quarter, EV sales were in the United States were 300,000 vehicles.
Okay.
300,000. That's up 48.8%, almost 50% versus the quarter a year ago. So again, the marketplace grew 50% versus a year ago overall across all vehicles. Right now, the EV share of the U.S. market is 7.2%. And again, there'll be people who say, kind of like people poo-pooed Amazon. They would say, oh, who cares about Amazon? They're only 1% of retail. They're only 2% of retail. If we look at the entire retail market, it's still largely a brick and mortar market. We heard this talk for years and years and years, right? Well, now that people are saying the same thing, well, these electric cars are only 7.2% of the market. Excuse me, but a year ago they were 5.7% of the market. So
Right.
they've grown their market share almost 50%. So now they grew the market 50% and their market share's up almost 50%. So we look at it and we say, okay, is anybody maxing out their bonus in internal combustion engine vehicle companies like Stellantis, which is Chrysler, or Ford or GM? Are those people making a lot of money? No, but how are people doing in the electric car companies, right? They're busting a gut. They're growing. They're looking. There's
Right.
new opportunities for advancement, opportunities to grow. Now, of course, there's challenges. Most of it raising money. That's the biggest challenge. But they're continuing to grow. Well, as far as the demand side of it, we talk about, well, maybe inventories are up a little bit. Well, production's up a little bit. But the other thing that we got to keep in mind is, what is the cost of buying a car? It's not, for most people, it's not just the sticker price. They finance a car. Most people don't pay cash. Most people still finance a brand new car when they buy it. Well, let's take another statistic here. A year ago, the loan on a brand new car was a 5.6% interest rate. Now, we could go back 2 years and it's even lower, but let's not bother with that. Okay, let's just say 1 year ago, 5.6% was your new car loan. Today, it's 9%. So your interest costs have doubled. That could cause a demand to go down. And of course, what we've seen is that demand is struggling in internal combustion engine cars. But people are sitting there saying they're financing at 9%. And again, back to my discussion about displacing the used car market.
Mm-hmm.
Well, the used car market now has an 11.3% average interest rate. Whereas if you buy a new car, it's 7.7%. I'm sorry, it's 9%. right? So the question is, if you could spend $25,000 on a used car and pay 11.3% interest, or spend $25,000 on a brand new EV and get 9% interest, your monthly cost is going to be cheaper
Yeah.
on owning that EV car. And we haven't even got the cost of service, gasoline, and all
Right.
that other stuff that gets put into it. So when working with trends, be sure you're thorough. Think through the demand, think through the customer side of the equation. What are they thinking about? What can I go buy? If I go spend $40,000, what does it cost me with interest, with maintenance charges? Changing the oil, changing the transmission fluid, doing those sorts of services. What does it cost me for the insurance? What does it cost me for the gasoline versus electric consumption?
Right.
Those things. Think through what's happening, and you'll start to see, wow, the economics are definitely working their way much more towards the buyer taking on a new EV as opposed to buying a used internal combustion engine vehicle.
Right. I think one thing that would be a good piece of advice to our listeners as they look at trends and how to use them and kind of go through this exercise, I think it's really important for people to not do this in a vacuum. Bring your team together, talk about the trends, talk about what's out there, go through these scenarios, sort of tease out the different nuances of these scenarios, and really think about the full implications. I think that a lot of times people are loners and they just think about trends in a very, very myopic way. And if you bring a few other people to the conversation, you eliminate some of that bias and actually get to a better answer faster.
Yeah. Which, by the way, takes us to our next step in the analysis, which is between the manufacturer and the customer. In many markets, you have a dealer or a retailer, somebody that's an intermediary, right? So if we look at the marketplace for EV sales, Rivian, Polestar, Lucid, Tesla, they sell direct to the customer, right? General Motors, Ford, Stellantis, they sell through the dealer network, which is still the largest part of the market. Okay, the dealer network is still over 90% of the marketplace today. So you say, okay, what's happening in the customer's mind? Well, if a customer wants to go buy a Tesla, they have to go to a Tesla shop, which may or may not have one in your town, depending on where you live. Whereas there's probably a Ford or a Chevy dealer in your town, even if it's a pretty small town. That if you wanted to look at one of these Rivians or one of these Lucids, you got to, they don't have very many stores, to be honest. Most, they're not even in half the states, not even close to half the states. But here's an interesting piece of information. Only 1/3 of dealers polled last quarter think that the marketplace will go electric. Only 1/3.
Wow.
Right. 2/3 of them are trying to hang on to the old marketplace. 2 of them think it'll stay internal combustion.
Yeah,
In
it's like
May,
don't be the last company selling buggy whips, right?
right.
Sheesh.
In May, 2/3 of the dealers in the United States did not have even one EV on the lot. So now, if you're out there looking at the marketplace, you go in and say, go to a Chevy dealer or go to a Ford dealer, and you say, well, I'm interested in looking at an electric car. Their reaction is going to be, well, okay, I don't have one. Can I show you one of these other cars, right? So you're in the middle of this now, you have a problem for those companies because the dealers are sitting there saying, wait a minute, I don't make that much money selling a car. I sell a car and I make a couple $100. I need you to come back in for those oil changes. I need you to come back in for those repairs and that the model has shifted over the last 40 years to where instead of making all the money on the car, they make most of their money on the service. And as we know, an electric car has almost no service. So now what happens is the dealers are sort of proactively trying to defend and extend the business that they've had. So 2/3 of them don't even have the car on the lot. Only 44% of dealers said they would stock one. When polled, get this, 44 said they would, only 44%. That means that 5.5 out of 10 dealers don't want one on a lot. So even not only do they not have them, they don't want one. And if offered one by the manufacturer, they wouldn't put one on the lot. And 45% of dealers said they would refuse to sell an EV entirely if the customer asked for one. In other words, if they came in and said, hey, I want a Mach 1, they would say, go somewhere else. I don't sell those cars. Yeah. 45% of dealers said that they would not sell them.
That's an astounding rate, Adam. I mean, that's remarkable.
And it's because over half of all the profits made are from service. So again, this is understanding the trends. So we have to see now, that's an obstacle for the EV sales market. It means that if you go to a Tesla or these other companies, you're going to get a good sale, right? Somebody's going to work with you to sell your vehicle. But if you're in the traditional market of Chevrolet, Ford, General Motors products, the Chrysler products, what you're going to hear is nothing. You're not going to hear that this is a marketplace. You're not going to hear that people are trying to sell the car. Yet, in spite of that aggressiveness towards maintaining the old marketplace, market share rose 50%. So what that says is there's a huge opportunity here for selling electric vehicles. In other words, if you had a chance and you had a little money, you ought to be banging on Rivian's door saying, how do I get a dealership? How could I get involved in this? How could I help you sell? You only have X number of dollars. Can I get a sales franchise that I could put in place in Casper, Wyoming, or that I could put in place in Denver, Colorado, or I could put in place in Wichita, Kansas, right? Think about this. There's so many ways you could go about that to try to make some money to push these guys, because people are looking for these products. And in fact, they're finding it difficult to get through the dealer network.
That same argument, Adam, that you just put out there regarding what the dealerships are saying and doing and all that, that's just reflective of good old generic pint-sized fear, right? It's the same what we hear in the AI, right? Oh yeah, AI is scary, and it's the same thing with working from home and all that. There's this big pushback, but I think it always comes down to fear. And I think what I like about what we do with Trends is it cuts through the BS. It cuts through that fear. It cuts through through all the noise, and it really gives you a clearer path to where things are really going.
Yeah. And I think what it also helps us to understand is to listen to all the data sources. So if you were at General Motors, for example, and you were polling your dealers and you say, well, what's the demand look like for these EV vehicles? You'd be hearing back, oh, there is none. People aren't asking for them. People don't want them. So you have to say, wait a minute, is that true, right? What's the real, where do I go? How do I get more data points? When you're tracking trends, don't try to rely on just one source. And don't just listen to a small set of customers. And don't just listen to your intermediaries. You have to get bigger. You have to think about, where's the marketplace headed? What's likely to happen with the trends, and how are they likely to grow as we get out there and as the marketplace continues to expand? So in the world of cars, when cars were expensive to make because they had a lot of components. I know you're a mechanical engineer and you went to the University of Michigan, and so you're intimately familiar. And most people that open the hood of a car kind of understand there's a lot of components in a car. And if your car ever has a problem, an internal combustion engine car has a problem, you know that you depend on the dealer to diagnose you between the engine, the intake system, the exhaust system, the transmission system, the braking system. There's a lot of components.
The computer, right?
Yeah. The price of vehicles are determined by the cost of the components. So you want enough volume to get component costs down, and then you want the components to come together in a functional way. Your higher end cars tend to have more components. Therefore, you get more luxury, you get more performance out of them because they have more components. So what's driven the cost in the value equation of historically of cars has been this idea of component costs. The difference now is that's not what drives the cost of an EV. It's the battery. There are so few components. If you think about it, in an electric vehicle, it's really the cost of batteries. And what we're seeing is we're seeing large investments being made in improving battery performance and lowering costs. If you looked at why people would buy or not buy an electric car, forever, from the beginning of when they would track, why wouldn't you buy an electric car? The number one reason was that they were afraid of running out of a charge.
Right.
Range anxiety is what they call it.
Right.
Oh, I won't be able to make it home. I won't be able to get where I want to go. So range anxiety was the big issue. Well, that changed. In June, the number one reason for not buying an electric car was price.
Wow.
No longer is range anxiety the big issue. And that's because of two things. One, batteries have improved. The vast majority of electric vehicles get somewhere between 350 and 400 miles per charge. And the very low end ones, the low cost ones, still get 200 miles per charge. And remember that, the vast majority of vehicles, again, don't ever drive beyond 50 miles from their home. If you think about you're in Tucson and you go to Phoenix, I know a lot, those people that live in the far west, most people who live rural, they drive their cars a lot more miles. But if you're urban and if you're East Coast, then the odds are your vehicle you may very rarely drive at 100 miles before you would have a chance to charge it again. And so range anxiety really isn't as big a problem as it was, but with battery improvements, it's going away. So now it's getting back to a focus on price, and then we've already touched on that with how they're coming out with more vehicles at a lower price, how the manufacturers are lowering their price to increase the volume. So we're going to see those lines merge, and people are going to start saying, oh, look, now I can get one at the right price. At the same time, we talked a month or so ago about how the charging system was going now towards people were buying into the Tesla
Right.
charging system, so that we wouldn't have multiple charging systems out there that were complicated. In fact, everyone would buy in. So I looked it up. And when it comes to electric market now, these are the people who have committed to make their cars function on the Tesla charging system, the Tesla standard. General Motors, all their vehicles. Mercedes has joined in all their vehicles. Ford has joined in all their vehicles. Nissan, Polestar, Rivian, and Volvo. All of those have committed to go to
Wow.
that standard. So now what we're seeing is that the standard is getting set in place for what the charging system will be. We have billions of dollars offered by the federal government to go out and put these charging stations in place. So there's another business opportunity. You now
Yeah.
don't have to worry about the technology risk. It's been laid out. Are you in a position to go out and open up charging stations? That's a business opportunity.
Sure.
Do you own some real estate? Do you own some retail real estate? If you do, why not convert some of that retail real estate into a charging station location for the customers to come along? Get ahead of the game. Be one of the first. Put it in the most convenient location. That way, in 10 years, things might look brilliant. I met a fellow one time, and he made a really good living. And I said, "How'd you do that?" And he says, "Well, I have a hotel." I said, "Oh, really?" I said, "Where's it located?" He said, "It's in California." And it turned out that his father, when Walt Disney got ready to build Disneyland, his
Hmm.
father bought some land across the street and built a hotel. It's the closest hotel to the front gate of Disneyland. You can actually walk to Disneyland from this hotel. So you can imagine, for many, many years, his occupancy rate was 100%. He sold it out all the time. People wanting to go to Disneyland, and he had a very good rate performance. So he got a lot of good pricing for those rooms, right? It's the right place, right time. He got there first. That's what I'm saying here. Can you get there first? Are you in an opportunity zone to where you
Right.
can say, look, I'm not seeing that many electric cars today, but while everybody else is laughing at me, I'm going to go get that site and I'm going to figure out how I'm going to put some charging stations on that site. And maybe you put one on an interstate to get going, then you put one in town to get going, and you start, that's how huge fortunes are made. This is how people who get in early and then their grandchildren are making literally billions of dollars
Yeah.
because they got to the market early. So it's just a matter of saying it is a trend.
And
It is
this
developing.
is a new time to make old money.
It is. It's a great phrase. This is a new time to make old money, and you're absolutely right about that. So, I think that what we see is you can look at trends beyond the headlines, get multiple data sources, look at the trend more than just one quarter, look at it over time, look at how the players are behaving, and look at how customers are behaving. Is demand going up? Are the demands that people have, in this case, I don't want to worry about range anxiety, are those needs being met? Are the manufacturers going in the direction of improving their
Yeah.
products? And is it substantial? Like, is it a large business? And when you see all these things being met, you can say that is a good place to be. That's a good place to put your money. And so, I'm not saying people should go buy these stocks, but what I am saying is that these things are growing. And when you when you grow, you generate cash, and bigger revenues, bigger cash flow means higher valuations.
Very well said, Adam. I think it was a good podcast. Really looked at things in a different way, and I think using the example of electric cars and what's happening today is really good. So with that, if you guys have any questions, you can reach out to Adam and I. We're always open to conversations. Manny@sparkpartners.com, Adam@sparkpartners.com. And with that, we will talk to you next week. Thank you, Adam.
Thanks, Manny.
Cheers.